Hi, I'm Sean Binkley with your Home Team Mortgages, and today we're going to talk about down payment and closing costs and what's required when you purchase a home. Now, typically in order to get the best mortgage rate, you're going to want to put at least 5% down on the home that you're purchasing. So if you buy a home worth, say, $200,000, you're going to want to put $10,000 down, 5% of the purchase price, in order to get that best mortgage rate. Now, there's also some closing costs involved with buying a home. So it's not just your down payment that you're going to have to come up with, but you also need to come up with roughly about 2% of the purchase price, or in this case, if the purchase price is $200,000, another $4,000 for a total of $14,000 to cover things like lawyer's fees, land transfer costs. Now, these funds can come from a variety of sources. The best way to come up with the down payment, of course, is if you have saved the money. Through either RSPs, through maybe a tax-free savings account, from money that you just have in the bank. Now, you can also get the money as a gift, possibly from a family member, if you do have a family member that would be so kind to gift you the money. Or in some cases, if your credit score is high enough, you may qualify to borrow the funds on the side through a line of credit or a loan, which we can arrange for you. Now, there are also zero-down mortgages available. Zero-down mortgages are great because you don't have to come up with that down payment. You will have to come up with your closing costs for your lawyer's fees and land transfer taxes, but you're going to be charged a higher interest rate for that zero-down mortgage. Typically, that's going to be 1.5% more than what you might be charged if you came up with even 5% down. And what that translates to is potentially a couple of $100 more per month on your mortgage payment, and possibly about $10,000 more in interest that you're going to pay over a 5-year period. However, it might be an option for you to get into the housing market. Now, for that zero-down mortgage, your credit score has to be very, very good. Your credit has to be excellent. For 5% down, your credit still has to be good, but not as high for a zero-down mortgage. Now, if you've had some credit challenges or perhaps a bankruptcy in the past, you may be asked to put more money down, and that could be as much as 20 or 30% down of the purchase price. So either way, just make sure that you know what's going to be required of you at closing, how much money you will have to bring into the lawyer's office, so that there are no surprises.